You're listening to the Sierra Nevada Realtors 411 podcast. Real Nevada, real estate, real talk.
Welcome, everybody, to the 411 podcast. And I am here with my co-host, President-elect Sam Olson.
And I'm here with my co-host and friend, your president, Garrett Lepire. And joining us today are our good friends from our Emerald sponsor at Movement Mortgage. We have Royal and Sheri. And Royal, I just want to dive right into this, okay? There's been a lot of information, a lot of craziness within the interest rates right now. Could you tell me a little bit about what's going on and what's impacting a borrower's interest rate?
Sure. 10 days ago, we basically began a war in Iran, and the subsequent fallout from that is that the oil prices are skyrocketing upwards. Yesterday morning, they were $120 a barrel. Today, they've settled at $82 per barrel, where 2-3 weeks ago, when rates were still under 6%, we were at $60 per barrel.
Okay.
So that in and of itself is inflationary. The price of oil is always inflationary, the arch enemy of interest rates. So the bottom line is that's why rates have, are basically going up right now. So we're probably in that, 6.375% range. We probably have gone up depending on variables, FICO, occupancy, LTV, those kinds of things. We've gone up from 6% or maybe sub 6 up to 6.375% range right now. So we're just kind of waiting to see what occurs. Hopefully this conflict will moderate and slow down for us, and then things should come back down to normal.
Good. I know I almost crashed my car this morning driving up here to Reno. I drove by the gas station. And it was $4.49 a gallon, and that was in Carson City. That wasn't even in Washoe County. That was in Carson City. That gas price has definitely gone up.
Yeah.
Now, I know one thing that we deal with on the real estate agent side a lot is talking to people who maybe had another kid, maybe the kids moved away to college, and they're sitting on a 3% interest rate or a 2.8% interest rate, and they're thinking about making a move. From your perspective in lending, how do you have that conversation with folks?
Well, I think it comes down to lifestyle and needs, like you're mentioning. And, it's great to have that home, which, who knows what the age might be, at 3%. But if the necessity's there to get a newer, bigger, better home, even though we're double that at 3 to maybe 3.25%, 3.5%, depending on, when they may have closed on their previous deal, then that 6% delta, even though it may be, who knows, what the loan amount's going to be, an extra, $400, $500, $600, $700 per month range. Let's say it's $700 a month times 12 months is $8,400 more per year. But if the national average of appreciation is between 2 to 4% on a, $700,000 house, let's say, just choosing that randomly, a 3% annual appreciation rate is $21,000. So perhaps that delta between the annual appreciation, who knows, even though that monthly cost is going up, maybe something that is worth looking at, just kind of a gradation of, seeing how somebody feels about it. And as you say, right, heck, I want a new house, and maybe with a newer home, there's less maintenance versus an old home. Maybe you save some money there. So I just think it's really about affordability and somebody's ability to be able to qualify for a loan and be able to handle that larger payment to have that big, beautiful, bright new place and say goodbye to the old place and take the appreciation that we've all enjoyed in the area that's been so dramatic. Since 2019, 2020, right, skyrocketed up. So even though the rate may be higher with that down payment based on the equity of the exit departure home, then maybe it levels out a little bit and maybe it gets that payment down even a little bit more. So yeah, all those variables are important.
I love the way you frame that. I talk to homeowners about a cap, and here's what I mean by that. So if I'm in a house that's 35 years old, I'm going to have a cap on what that price is ever going to sell for. Okay? And right now, we're pretty high on price. Prices are staying elevated. But if I can sell that 35-year-old house and get into a brand new house or a 5-year-old house, my cap just lifted. So there is a money-making event in that. Even if my monthly payment goes up, I can build more appreciation in this new property than the one I'm sitting in. So I love the way that you frame that.
Yep. I'm with you. Same page.
Yep.
Well, Sheri, how does this reflect back on? We're talking a little bit about our move up buyers, but we have our first time home buyers as well. And we love our first time home buyers who are making these moves, and I know all of our members love to work with them. And when somebody steps onto the property ownership ladder and gets into the game and starts accruing that generational wealth, what challenges are they facing right now?
Oh, they're facing a lot of challenges as it relates to the cost. Sometimes, like rent will include certain utilities, and they need to be able to budget to handle not only utilities on top of a principal, interest, taxes, homeowners insurance payment, but also the maintenance and paying their own water bill, their own trash bill, and preparing for any Murphy's Law, what's going to break, that furnace, that AC is going to go out, or do they want to make improvements to capitalize on that?
Yeah. Well, are there any specific programs that you know that maybe are offered through the state or perhaps through Movement Mortgage that would really help educate those first-time homebuyers on ways to be financially smart with this decision and not get caught up in what looks good on Instagram?
Yes, so there are state programs that will actually help a first-time homebuyer who might need some down payment assistance, and Movement Mortgage has Movement Boost to help with that as well. It's something to consider, but as it relates to learning how to prepare for home ownership, they should understand their credit, probably look at getting pre-approved in advance, find out how much do you pre-qualify to buy, what's it going to cost you at the closing table, how much is your monthly payment going to be. I tell my clients when they get their arms around those 3 key pieces of information, they can be compelled to shop aggressively inside their affordability.
Oh, that's so great. That's so great.
And I love that because as a real estate agent, if you don't have a pre-qualification letter, not getting in my car. We got to have that, and we got to have that up front so you know what your budget is. And more importantly, when I go out and I show you on Saturday that house that you fall in love with, bankers don't like to work on the weekends. Sorry, guys.
We're not bankers.
We're always available.
Always available. But you want to have that letter so we can go back to my office, write an offer on it, and have all of our ducks in a row right there. So we're not spending a day, 8 hours, 4 hours trying to get pre-approved after we find the house that we like. We want to do that up front.
I have an exercise too that I tell my first-time homebuyers that sit in front of me and say, I think I can afford this. I'll tell them, well, if you've been paying X in rent and you're prepared for X plus in a mortgage, take that X plus amount and lock it up in a dedicated savings account. When you do that every month, you're taking at the same day you pay your $800 a month in rent and you think you're prepared for $1,600 in a mortgage, lock up that $800, take it out of your monthly budget as an exercise.
Try it on.
Try it on for size. Yeah, because now what do you get? You get a savings every month that's going to help you accumulate the assets you need for down payment and closing. And it's just a test run that's right there if you can't do it.
Yeah, that's so great. I mean, this is why it's so important to work with a local lending team because, we see it all the time. Our viewers see it. Can I say? The spaceship pre-approval. I can say that? Can I say that?
You could say that.
Okay, the spaceship pre-approval that's not backed by any person or any of these conversations. They haven't had these conversations with their keyboard. They're sitting down with you two talking about how can they actually make sure that they're successful in ownership.
Sorry.
No, please go ahead.
No, super important to get that pre-approval, right? Beyond the pre-qualification. I mean, between us, we've got over 40 years doing this. So I've been around the block for a minute. And so I can't speak for Sheri, but I will for both of us. It's super important that we feel utterly confident. So, I mean, we have the conversation, we get the application, we get all the supporting documentation that's required, and that there's just no gray area whatsoever. And so, as you say, guys don't want to waste your time, nor does anybody else. So let's check all the boxes, make certain that we know exactly where we stand. So when they find that house that they love with your help, then it's like, no problem. Here's a pre-approval letter, not a pre-qual letter. We've already been through the entire thing. We've already run the automated underwriting systems. We have approved eligible, whatever we need. We've, income, credit, assets, all of those things. We're ready to go. So let's just do this and keep it as clean, efficient, and streamlined as possible to reach that finish line, as fast as we can, or at least clear for docs.
Love it. I know over the last few years, and especially as we have an aging population, an aging home ownership population, baby boomers own a lot of real estate across the country. That reverse mortgages have become a bigger topic. So, talk to us a little bit about what's a reverse mortgage and what kind of products or what kind of client would be a good fit for that.
Reverse mortgages are becoming my favorite mortgage to work with. They're probably the most elite loan I work with as well. People think they need a reverse mortgage when they are needy. They can use it if you are of retirement age and you own a house that has equity. It's possible that you could use it to supplement income, pull a disbursement for home improvements you might not have the capital on hand to do. And so there's lots of benefits in it, but a reverse loan has strategy built in. My most savviest and financial wealthy clients that engage in a reverse do so with strategy in mind.
What could that strategy be? I'm just super curious.
Yep.
Like, I have parents. I was not manufactured in a lab. I have parents, and they have homes, and those homes have equity. And I don't want those homes because they are not here. But I want my parents to be comfortable.
I'm so glad you just said that. That's one of the biggest things that clients will say to me when they sit down is, no, I want the house free and clear to hand down to the kids. And I will shoot back to them, which one's going to move in? And they all go blank, like, no, none of the kids are going to move into the house. Then why do we want to hand a free and clear house down to the children when you could actually potentially do things otherwise with money? You could give with a warm hand by pulling money out of the asset of the equity built up in the house versus a cold hand after you've passed away with baggage of resolving that house that nobody's going to live in. The strategy that I talk about, and is real hard for people to get their arms around, is a reverse for purchase loan. So it's not just a refinance. It's a reverse for purchase loan. Tax benefits fall into the acquisition indebtedness related to mortgages. So if you get a loan, and very common, maybe I'll be talking to a client that says, I'm going to buy a house and I just sold a place in California, for example, and I'm moving over here and I'll just pay cash for a $600,000 house. Well, they potentially might be able to afford up to $850,000. Wouldn't they be happier in a nicer house and still live with no mortgage payment obligation? Now, the obligation part, you're not obligated to a payment, and failure to make that is not any risk of foreclosure. However, the election to make a payment on a reverse for purchase loan, since it is acquisition indebtedness, will generate a 1098 interest deduction at the end of the year. You have to get your arms around this. You could actually take a reverse loan and nest egg payments that you plan to make into it, and then batch those payments in roughly, I would say on an average, about every 3 years. You're going to get a 1098 in excess because it's going to be 3 years of accumulated interest that you just paid into that mortgage. And what can you do with that? Offset an RMD, required mandatory distribution, taxable event.
Interesting.
Slick.
Wow.
Yep.
Like, I'm kind of smart. I'm an okay guy. That's genius. That's genius. I wish more of our members would know about that. If you have questions about this, you need to call these folks because that's wow.
And what a great service you guys provide on that. And as a real estate agent, what a great service I can provide my client by getting them in front of people like you who really know the ins and outs and different products that may fit them better than a conventional 30-year mortgage.
I have a statistic for you. I have a statistic. So do you know that 33% of all buyers going into a 55 and older community will sell and buy up in the same community within 3 years? That's 3 out of every 10.
Wow.
Really?
So if you're working with a clientele that's moving into a 55 and older community and they might be eligible for a reverse loan, stop that second sale and decision to pack the house and move again just down the street to a house that's nicer because they limited their buying power. We can do more with a reverse.
Love that.
Awesome. And I guess it goes to show if you have that statistic, you can show them that next house, that house number 2 within the community, when it's 6% cheaper because it hasn't appreciated.
And as a real estate agent, I look at that and I go, man, that's a pool of people that I need to go after if they want to sell or buy a house. They're looking to transact. That's a pool of people and a good lead source to go after.
And it increases your
Yes.
commission dollars because the sale price just went up.
Yeah, exactly right.
We don't talk about commission on this podcast.
Oh. Well, we weren't talking. It's a concept.
I have one last question, if that's all right.
Go for it.
I've heard you mention, in our conversations in this room and outside of this room and the meetings that we have about impact lending.
Mhm.
And I think it's so important that we get to know a little bit more about what impact lending is. Would you be willing to share what that is?
Absolutely. Impact lending is when a certain amount of our profits are reinvested back into the community. And Movement Mortgage has Movement Foundation behind it. We have built 13 schools in underserved areas to help the youth learn to read, write, and do arithmetic so they can hold a job, balance a checkbook, own a house someday, stay away from other avenues that are maybe depleting lifestyle and give them an enrichment instead. So we do a lot. Movement Mortgage is really invested in the foundation.
And with our clients, many times we can track how many backpacks
Mhm.
or how many books we can actually purchase for kids. Like by working with us, closing your loan with us, you just purchased 500 backpacks, or you just purchased a bunch of books, for some underprivileged kids. So always, it's a good feeling and, great opportunity to give back to the community.
Love that.
Fantastic.
Well, and how great to work with a local lender, someone that you can go to their office and you get to have a conversation in person with them. That's wonderful. And I want to thank Movement Mortgage, Sheri Cook, Royal, for being here with us today as well. Thank you guys. We'll see you on the next episode.
Thank you.
Thanks for listening to the Sierra Nevada Realtors 411 podcast. You can find more engaging episodes on Spotify, Apple Podcasts, or YouTube.